This simple Heikin Ashi strategy allowed us to win 9 out of 10 trades last week. Not knowing these 3 simple steps could be the reason why you complicate your trading process every single time. You can apply this incredibly simple and powerful strategy to Forex, crypto, and stocks. During this video, we also will show you how you can get access to our top-notch private indicator known as quantcapitalsuppport. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell so that you can keep up to date with new content releases. The biggest trader's mistake is relying on just 1 or 2 trading strategies. The market always evolves over time. As a result, we should also expand our knowledge to stay afloat. As you can see, we have a classic chart with Japanese candles to the right and the same chart with Heikin Ashi candles to the left. So Heikin Ashi candlesticks make the chart more readable and trend simpler to analyze. As a result, Heikin Ashi candles help us filter out the noise of day-to-day price fluctuations. As can be seen on the right chart, we have some red bearish candles during an uptrend, which is normal because the price always moves cyclically. Alternatively, the Heikin Ashi candles remove all the short-term noise and shows us a pure trend. That's because Heikin Ashi candles calculate by using a different formula. So let's consider it in depth. So if you are enjoying the video, leave a like on it. Also let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Here we can see a Japanese candlestick which calculates using the current period data and shows the opening, closing, high and low price points. By comparison, a Heikin Ashi candlestick takes 2-period average data. To calculate the next open, we should take the open of the previous bar, add to the close of the previous candle and divide it by 2. As a result, the opening of each Heikin Ashi candle stands exactly in the middle of the previous one. To calculate the next close, we should add the following values: open, close, high and low of the current candle and divide it by 4. It shows us the average price of the current bar. A Heikin Ashi candle high is a maximum value from the high, open or close of the current period, while low is the minimum value from the low, open or close of the current period. In an uptrend, the Heikin Ashi candle with big body, no wick along the bottom, and relatively small upper wick shows us a strong bullish momentum. In a downtrend, the Heikin Ashi candle with a big body, no wick along the top, and relatively small wick along the bottom shows us a strong bearish momentum. Because the Heikin Ashi technique smooths price information over 2 periods, it makes trends, price patterns, and reversal points easier to spot. With that being said, let's move on to the strategy section. These are the exact steps that we use to make great trades. Step 1. We should add the 50 EMA to the chart, which acts as a dynamic support and resistance. Here we use a 2-hour chart, and the price should be above the 50 EMA to give us a bullish bias, and consequently the price should be below the 50 EMA to give us a bearish bias. Also, you may adjust the basic time frame according to your trading style. For instance, if you are a swing trader, you can use a 4-hour time frame to establish a bias. If you are a day trader, you can switch to the 1-hour time frame for more aggressive entries, so that you can find the best combination which perfectly suits you. However, you should also remember that the following steps remain unchanged. Step 2. We should wait for a long wick rejection candle of the 50 EMA. It shows us a pullback to the dynamic support or resistance. We prefer the pullback trading style, as it allows us to enter the trades with tighter stop loss and wider take profit, meaning that this approach improves the risk profile significantly. And here is a pro tip. The wick of the rejection candle should be greater than its body. This shows us a clear pullback to the dynamic support or resistance with a high chance of a trend continuation move. In the opposite case, if the body of the rejection candle is greater than its wick, we should skip this setup due to the high chance of a trend change. Step 3. Now we need to confirm that our pullback is over. For this reason, move to the 15-minute time frame and look for the 50 EMA break to confirm the immediate trend. And here is another pro tip. In some cases, the price can be already above or below the 50 EMA on the 15-minute time frame. In such a case, we should jump into the trade immediately because our immediate trend is already confirmed. As for now, let's see some examples. So here is pound yen to our time frame, and as you can see, the price is above the 50 EMA on the given time frame, meaning that our first step is complete. Now we should wait for a long wick rejection candle, and here it is. We have two long wick candles right here. However, the first candle doesn't satisfy our rejection criteria because the body of this candle is greater than its wick. But we have another rejection right here that easily satisfies our criteria, but still no entry, as the price may easily form another swing low. At this point, let's move on to the 15-minute time frame to confirm our immediate trend. Here is the 15-minute time frame, and we can see the 50 EMA break right here. So our immediate trend is confirmed as bullish, and we can enter the trade on the next candle. So we should place our stop loss below the previous swing low and target 2-for-1 risk to reward. And as you can see, our take profit was easily hit. Here's Tesla to our time frame, so the price is above the 50 EMA right here, meaning that our first step is done. We can also see a perfect long wick rejection candle right here. So let's move on to the 15-minute time frame. Here's our 2-hour time frame candle, and we should wait for the 50 EMA break, and here it is. We enter right on the next candle, placing our stop loss below the recent swing low, and the price then proceeded up drastically. Let's take a look at some short examples as well. Here is Bitcoin to our time frame, and as we can see, we have multiple trading opportunities right here. However, at this point, let's focus our attention on this long wick candle. So the price is below the 50 EMA, and we have a great long wick rejection candle, meaning that our step 1 and step 2 are complete. With that being said, let's move down to the 15-minute time frame. Here's 15-minute time frame, and as you can see, we have a perfect 50 EMA breakout right here. So we enter on the next candle, placing our stop loss above the previous swing high and targeting 2-for-1. As you can see, our take profit was easily hit. Here is gold to our time frame, and as we can see, the price is below the 50 EMA at this point, and we have an okay long wick rejection candle. So with that being said, let's move down to the 15-minute time frame to see whether confirmation will present itself. Here's 15-minute time frame, and here's our 2-hour time frame rejection candle, and as you can see, the price is already below the 50 EMA on the given time frame. So with that being said, we can enter the trade immediately, placing our stop loss above the previous swing high and targeting 2-for-1. As a result, then price easily went in our direction. As for now, let's see the last example that emphasizes the importance of the last step, meaning the 15-minute confirmation. Here's gold to our time frame, and we can see that the price recently broke the 50 EMA on the given time frame and proceeded up, allowing us to move to the second step. Then we received a great long wick rejection candle with a very long wick and small body. Once again, our second step is complete. With that being said, let's move down to the 15-minute time frame, trying to receive the final confirmation of the immediate trend. Here is 15-minute time frame, and as you can see, the 50 EMA was never broken right here, meaning that our immediate trend remained bearish, and the price then dropped significantly. From the price action standpoint, this tells us that the pullback translated to a trend change. So once again, always wait for the 15-minute time frame confirmation before entering the trade. The initial long wick candle shows us only a reaction, which is not enough for a high-quality trade, due to the absence of a multi-time frame confluence regarding the trend. Now, knowing this strategy is only one part of the process. A lot of trading opportunities arise every day on the market. If you want to enhance your trading experience, you need a high-quality algorithm that combines complex trading processes to tell you when to buy and when to sell. So if you want to access our own private indicator QuantAlgo to get results fast, all links will be in the description and in the comment section below as well. Without this algo, will put you at a disadvantage. So if you are enjoying the video and found it helpful, please leave a like on this video and comment, as it goes a long way and helps support our channel. We appreciate it, guys. So thanks for your time, and I'll see you in the next video.